Hello and welcome to our channel. If you enjoy our content, don't forget to like, share, and subscribe. And remember, we're not financial advisors. This video is for informational purposes only. Now, have you ever wondered what it might be like to peek into the investment strategy of one of the greatest investors of all time, Warren Buffett? Today, we're going to do exactly that. Warren Buffett, the mastermind behind the $371 billion investment portfolio at Berkshire Hathaway, is nothing short of a legend on Wall Street. His impressive returns since he took the helm in the mid-1960s have earned him the title of the Oracle of Omaha. To put this in perspective, while the broad-based S&P 500 only just managed to achieve a cumulative total return of 30,000%, including dividends, Buffett has overseen an astonishing aggregate return of over 4,700,000% in his company's Class A shares in under 6 decades. It's no wonder that both professional and everyday investors are eager to follow his lead. What sets Warren Buffett apart is the transparency of his investment strategy. Thanks to the quarterly filed Form 13Fs with the Securities and Exchange Commission, investors have been able to mirror Buffett's trading activity for decades. This level of transparency is quite rare in the world of high-stakes investing, and this openness that has drawn such a large and dedicated following. The other noteworthy aspect of Berkshire's portfolio is the caliber of the companies it contains. This isn't a collection of risky, unproven startups. Instead, it's a treasure trove of profitable, time-tested companies, each a testament to Buffett's keen eye for great investment opportunities. As we step into the shortest month of the year, there are 3 standout investments in Buffett's portfolio that are particularly worth noting. Today, we'll be focusing on one that's been making waves recently, SiriusXM Holdings. Now let's delve into one of the standout investments in Buffett's portfolio, SiriusXM Holdings. So what makes SiriusXM Holdings a gem in the vast portfolio of Warren Buffett? Well, let's take a step back and look at the history of Buffett's investment in SiriusXM. As part of the Berkshire Hathaway portfolio, SiriusXM was first added to the mix in the fourth quarter of 2016. Buffett, known for his long-term investment strategies, saw potential in the satellite radio operator, a unique player in the radio industry. The initial investment was considerable, with Berkshire Hathaway acquiring more than 40 million shares of SiriusXM, a clear indication of Buffett's confidence in the company. Over the years, this confidence has been rewarded, with SiriusXM proving itself to be a steady performer within Buffett's portfolio. Fast forward to the third quarter of 23, after a 2-year hiatus, Buffett's Berkshire Hathaway made a return to SiriusXM. The portfolio added more shares of the satellite radio operator, indicating a renewed confidence in the company's prospects. This marked a significant moment, as it showed Buffett's continued belief in SiriusXM, despite the challenges faced by the broader radio industry. The radio industry, as we know, is heavily dependent on the health of the advertising market. It's a cyclical sector, and businesses can be quick to cut back on ad spending at the first signs of economic trouble. But SiriusXM is a different beast. Unlike its terrestrial and online counterparts, SiriusXM is the only legally authorized satellite radio operator. This unique status gives it a competitive edge and superior pricing power with its subscription services. Furthermore, where most radio operators rely heavily on advertising revenue, SiriusXM has a more balanced approach. It generates a significant portion of its revenue from subscription services, providing it with a more stable revenue stream. This, in combination with its unique position in the market, makes SiriusXM a resilient player even in difficult economic times. So what does this all mean? It means that Buffett's investment in SiriusXM is a testament to his knack for spotting companies with a competitive edge and steady revenue streams. It's a testament to his ability to identify potential in sectors where others might only see challenges. In the case of SiriusXM, Buffett saw a company that was uniquely positioned in its industry and had a strong business model. He saw a company that, despite the cyclical nature of its industry, had the potential to deliver steady returns. And he acted on this insight, adding SiriusXM to his portfolio and then returning to it after a 2-year absence. But why SiriusXM? What makes it a good investment? Well, the answers to these questions are rooted in the company's unique position in the radio industry, its resilient business model, and its proven ability to deliver steady returns. All qualities that make it a quintessential Buffett investment. Let's uncover the key points that make SiriusXM a promising investment. Starting off, it's essential to understand that SiriusXM isn't just another player in the radio industry. It holds a unique position as the only legally authorized satellite radio operator. This exclusivity is not just a title, it's a robust competitive shield that sets SiriusXM apart from terrestrial and online radio operators. Now you might be wondering, what does this mean for SiriusXM? Well, it's quite simple. This unique position affords the company superior pricing power with its subscription services. Imagine being the only restaurant in town that serves a particular cuisine. You'd have the freedom to set your prices without worrying about competitors undercutting you. That's precisely the kind of advantage SiriusXM enjoys in the satellite radio market. It's the only game in town, which gives it a considerable amount of control over its pricing. This pricing power translates into steady, reliable revenue, which is a significant boon, especially in an uncertain economy. Now let's delve a little deeper into the revenue aspect. The way SiriusXM generates its revenue is markedly different from traditional radio operators. Terrestrial and online radio companies heavily rely on advertising revenue. They're at the mercy of the advertising market's cyclical nature. When the economy dips, businesses often scale back their advertising budgets, which can hit radio companies hard. But SiriusXM dances to a different beat. Instead of relying primarily on advertising revenue, SiriusXM's main income source is its subscription services. This is a significant divergence from the norm in the radio industry, and it's a divergence that works greatly in SiriusXM's favor. Why? Because subscriptions provide a more stable and predictable revenue stream. Subscribers pay a set fee each month, regardless of the economic climate. This structure insulates SiriusXM from the volatility of the advertising market, providing a steady cash flow that can be relied upon even in turbulent times. This steady cash flow is not just beneficial for the company's bottom line. It also provides SiriusXM with the financial stability to invest in improving its services and expanding its offering. Such investments can lead to increased subscriber numbers, creating a positive cycle of growth and stability. Moreover, SiriusXM's dominance in the satellite radio market and its subscription-based revenue model also make it an attractive investment from a risk perspective. The company's exclusive position in the market and steady cash flow help mitigate some of the risks associated with investing in the radio industry, particularly those related to the cyclical nature of advertising revenue. So, to sum it up, SiriusXM's unique position as the only legally authorized satellite radio operator, its superior pricing power, and its subscription-based revenue model are key factors that make it stand out in the radio industry. These factors not only contribute to its financial stability and growth potential, but also make it a less risky investment compared to traditional radio operators. So, SiriusXM seems like a pretty solid investment, doesn't it? But there's more to the story. Now that we've seen the key points, let's delve into why SiriusXM is a particularly good investment. Starting off, SiriusXM demonstrates resilience in virtually any economic climate. Unlike its terrestrial and online radio counterparts, SiriusXM isn't as dependent on the health of the advertising market. You see, traditional radio companies rely heavily on ad spending, which is cyclical and prone to cuts during economic downturns. SiriusXM, however, has a different revenue model. It doesn't bank on advertisements, but on its subscription services. This model gives SiriusXM a steady stream of income, making it less susceptible to market fluctuations. Now let's talk about the distinct competitive advantages of this satellite radio operator. The most significant of these advantages is that SiriusXM is the only legally authorized satellite radio operator. While this doesn't completely shield it from competition, it certainly gives it superior pricing power. Think about it. With no direct competition in the satellite radio space, SiriusXM can set its subscription prices at a level that maximizes its profit without worrying about being undercut by a rival. That's a luxury very few businesses enjoy. Moreover, the company's business model is also a competitive advantage. SiriusXM's subscription-based model allows it to prioritize content and customer experience over advertisements. This focus on quality content and user experience helps the company to retain its existing subscribers and attract new ones, driving its growth in the process. But what about the potential for growth and profitability of SiriusXM? Well, the company has a market cap of $20 billion and it's not done growing. The satellite radio market, though niche, is far from saturated. There's still a substantial untapped customer base out there, especially in rural and remote areas where traditional radio coverage is patchy at best. And let's not forget about the potential in the automobile market. SiriusXM has already struck deals with several car manufacturers to include its radios in their new vehicles. This strategy not only expands SiriusXM's customer base, but also provides a steady stream of new subscribers. In terms of profitability, SiriusXM has a gross margin of over 43%. This high margin indicates that the company is efficiently managing its costs and turning a good profit. What's more, SiriusXM offers a dividend yield of over 2%. While this may not be the highest yield out there, it's a nice bonus for investors, especially those seeking a steady income. So, there you have it. SiriusXM is a resilient company with unique competitive advantages and a strong potential for growth and profitability. It's a company that's well-positioned to weather economic storms, outpace its competition, and deliver value to its shareholders. It's clear why Warren Buffett has invested in SiriusXM. It's a company with a solid foundation, unique advantages, and a promising future. So what can we learn from Warren Buffett's investment in SiriusXM? As we wrap up this exploration of one of Warren Buffett's intriguing investments, it's important to recap the key points about SiriusXM and why it's considered a good investment. SiriusXM is the only legally authorized satellite radio operator, which gives it a unique position in the market. This doesn't exempt the company from competition, but it does grant superior pricing power with its subscription services. This, coupled with its strategic focus on revenue generation, sets SiriusXM apart from terrestrial and online radio operators who are heavily reliant on advertising revenue. The health of the advertising market is a significant concern for radio companies. Ad spending is cyclical, with businesses quick to cut back on their budgets at the first signs of economic distress. With some indicators hinting at potential challenges for the U.S. economy, it's a crucial time for companies like SiriusXM. However, its unique business model and competitive advantages place it in a strong position to weather any economic storm. And this brings us to the crux of our discussion. The essence of Warren Buffett's investment strategy lies in his ability to identify profitable, time-tested companies. Buffett doesn't just look at a company's current performance. He delves into its business model, its competitive advantages, and its potential for long-term growth. It's not about quick wins or riding the wave of popular trends. It's about understanding the value and potential of a company. Buffett's investment in SiriusXM is a testament to this strategy. Despite the challenges faced by the radio industry and the cyclical nature of ad spending, Buffett sees potential in SiriusXM. He recognizes the company's unique market position and its ability to generate revenue in virtually any economic climate. It's not about the company's current price or its performance over the past quarter. It's about the company's ability to deliver value over the long term. And that's the takeaway for us, whether we're seasoned investors or just starting on our investment journey. Investing isn't about guessing which companies will be the next big thing or jumping on trending stocks. It's about understanding a company's value, its business model, and its growth potential. It's about making strategic investments in companies that are profitable and have stood the test of time. We may not all have the financial resources of Warren Buffett, but we can certainly learn from his investment strategy. We can seek out those hidden gems, those companies that, like SiriusXM, have unique competitive advantages and solid business models. We can make strategic investments based on careful analysis and understanding rather than chasing trends or acting on impulse. Remember, successful investing isn't about following trends, it's about understanding the value and potential of a company. And who better to learn from than Warren Buffett himself?